square up two things for me, Nick, if you would. On the one hand, we have this RRR, the triple R, getting cut by 1%, which would be stimulative, saying maybe we want to make sure the economy keeps going. But I thought the GDP number was a pretty good number. How do those things square up?
Well, I think they're basically decisions that are moving on independent tracks. The central bank has been gradually cutting the reserve requirement for a number of years. This was just one small additional step. It will add a little bit to liquidity, but not that much. The GDP number did come in a little bit stronger than most people had anticipated, as you said, at 6.8%. The other thing I would note is that export growth was relatively weak compared to imports, so the external sector was actually a modest drag on China's economic growth, which makes the 6.8 figure for GDP even reflecting a much stronger domestic demand than you would anticipate just based on the headline number. In other words, domestic demand was big enough to offset the drag from the external sector and still end up with a 6.8% growth. And it appeared, Nick, correct me if I'm wrong, that actually internal consumption, consumer consumption, more than made up for some shortfall in industrial production. Is this a longer trend? Are they actually having some success in something they've said they've wanted to do for a good long time? Yes, this is definitely more progress on that front. We have been seeing some progress gradually in shifting towards more consumption-led growth. It actually started back in 2013. But I believe this is the strongest quarter in that the contribution of the increased consumption to the overall expansion of output, the contribution was about 75%, actually a little bit more. Last year, for example, for the whole year, consumption growth contributed about 60% to the expansion of GDP. So this quarter is really outstanding in terms of the contribution of consumption demand, obviously investment demand weakening, which is what they want it to do.
To David's point, industrial output did miss estimates, but when you see the longer term, you see that still it has been relatively stable. The chart on the GTV Go library for our Bloomberg audience, they can see that industrial output, retail sales have been pretty stable, but not so much so for fixed asset investments. Will we see a further slowdown given that President Xi's campaign to control debt is ongoing?
Well, that's certainly a factor. The deleveraging, which has begun modestly over the last year, probably will slow down industrial growth. But the key thing to keep in mind here is that, yeah, industrial value added, which everybody always follows very, very closely, is softened. But the service sector is growing very strongly, and it's growing significantly more rapidly than GDP. Again, that's a continuation of a trend that's been underway for a couple of years, but it's even stronger. And that reflects the fact that it's related to consumption because a lot of consumption expenditure is on services. So we see strong growth of consumption, and looking at it from the production side, we see strong growth of services, which again is offsetting the relative weakness on the industrial side.